Hello everyone, let me introduce myself. My name is Komang Astuti Dewi, with NPM 22411071 from Class MNJ 22B, a student at Teknokrat University of Indonesia. Here I will explain a little about the material on the tax collection system, types of taxes, tax rates, tax functions in the subject of tax law. The tax collection system is a procedure used to calculate and collect taxes that must be paid by taxpayers to the state. In Indonesia, there are three types of tax collection systems that differ in the way they are calculated and reported, namely 1. Self-assessment system. This system gives taxpayers the authority to calculate, report, and pay their own taxes. 2. Official assessment system. This system imposes the authority to calculate taxes on tax officers. Tax officers determine the amount of tax that must be paid by taxpayers. 3. Withholding assessment system. This system gives authority to a third party, usually the treasurer or tax division of the company, to calculate and deduct taxes from employee income. Next, types of taxes. Various types of taxes in Indonesia can be categorized, namely 1. Income tax, PPH, tax imposed on individual or corporate income. 2. Value-added tax, PPN, tax imposed on every transaction of buying and selling goods and services. 3. Land and building tax, PBB, tax on land and building ownership. 4. Motor vehicle tax, tax imposed on motor vehicles. Each type of tax has different rates, depending on the applicable tax regulations. Tax rates in Indonesia are set based on a percentage determined by the government and can vary depending on the type of tax. The following is an explanation of the tax rates that apply in Indonesia. Types of tax rates. 1. Progressive rate definition, a tax rate that increases in proportion to the tax base, DPP. The higher the income, the higher the tax percentage. Example, taxable income, PKP, up to IDR 60 million is subject to a rate of 5%. PKP IDR 60 million, IDR 250 million is subject to a rate of 15%. PKP IDR 250 million, IDR 500 million is subject to a rate of 25%. PKP above IDR 500 million to IDR 5 billion is subject to a rate of 30%. PKP above IDR 5 billion is subject to a rate of IDR 5 billion is subject to a rate of 35%. 134. 2. Degressive rate, definition, a tax rate whose percentage decreases as the tax base increases. Although the percentage is smaller, the amount of tax payable may be greater because the value of the tax object is high. Implementation. There has been no application of degressive rates in tax regulations in Indonesia. 3. Proportional tariff, definition, a fixed rate even if there is a change in the DPP. The tax percentage does not change regardless of the value of the taxable object. Example, value-added tax, VAT, which is currently set at 11% for all taxable goods and services. 4. Fixed rate, regressive, definition, a fixed rate regardless of the amount of the tax base. Example, stamp duty with a fixed value, such as IDR 10,000 for certain documents. Taxes play a very important role in the economy and development of a country. In Indonesia, the function of taxes can be divided into four main categories, namely, 1. Budget function. Taxes serve as the main source of income for the state, which is used to finance routine and development expenditures. Revenue from taxes is used for various items, including employee spending, infrastructure maintenance, and other public programs. Thus, taxes become a vital tool for carrying out state duties and meeting the needs of the community. 2. Regulatory function. Taxes also function as an instrument to regulate the economy. Through tax policies, the government can encourage domestic and foreign investment by providing incentives or tax breaks. In addition, taxes can be used to protect domestic industries by setting high import duties on imported goods. 3. Stability function. The existence of taxes helps the government maintain economic stability, including controlling inflation. By setting appropriate tax rates, the government can regulate the circulation of money in the community so that it can affect the inflation rate and maintain price stability. Fourth, income redistribution function. Taxes play a role in the redistribution of income by financing public interests and creating jobs. Tax revenues are used for programs that support low-income communities, thereby helping to reduce economic disparities and improve overall societal well-being.